Hey, what's going on, guys? My name is Ash, certified financial planner, bringing you the knowledge, perspective, and experience from my world to help empower you to live a better financial life. Thanks for tuning back in, and if you're new, make sure you hit the subscribe button so that way you can check out weekly posts on personal wealth management and market insights. Today, we're talking about where to get started on your financial journey. We all come from different walks of life, cultures, and money habits that were influenced primarily of how we grew up, and parents and family members are a big part of that. Some of us got more help than others, but many can fall into the same category of not knowing what the hell to do. I've worked with a number of clients who avoid taking control of their finances simply because they do not know where to get started. So today, I'm going to break down the initial steps that you should take to grab your finances by the horn. I'm going to break it down into 3 easy steps: aggregate, analyze, and execute. These are the foundational steps that we use in financial planning to do what we call create a cash flow analysis. This in turn also helps us create a budget. This is extremely important because before any one of us can invest, save for that big purchase or life event, we need to know exactly where we are financially. And a cash flow analysis does just that. It provides a high-level overview of your income, expenses, and also your savings. And of course, a budget allows you to reach your goals and objectives if you stay on track. That's always a tough area for a lot of folks, so I'll be giving you some tips and tricks on how to build and stay within your budget a little bit later. Starting with the first step, what you want to do is aggregate all your income and your expenses. So basically, what are your sources of income? How frequently are you paid? And what does your monthly income look like? Easiest way to get this information is to look at your pay stub and see what you get on a monthly basis net of taxes. Or you can simply access your direct deposit account. Next, you want to aggregate your spending. What are you spending your money on? How much cash are you withdrawing at the ATM? What debt payments are you making, if any? The best way to find this information is going to be on your credit card statements or your checking account statements. And to help you identify the different spending types, here's a simple, easy to use calculator that can break down your spending so that way you can see it in pie chart form. The link for the calculator is in the description below. And don't worry, it is a free tool that anybody can access and there's no annoying pop-ups. I'll actually walk you guys through it. Here it is. So this is a web-based tool that's not going to track your information or ask you to sell your soul, and it's really simple to use. It breaks down the categories starting with your income at the top and all the potential expenses you could have below that. So let's input Bob's information. Bob is a 28-year-old executive chef at a pizzeria in West Hollywood, California. He also does acting and modeling on the side. For income, he makes $4,000 a month after taxes as a chef and $2,000 a month as an actor/model. Since his acting wages fluctuate, we took the average of what he makes on a 12-month basis. He does not own a home, but he does rent a place with his buddy Jerome. His portion of rent is $1,500 a month. He pays about $100 for utilities and only about $150 for groceries since he mostly eats free pizza from his job. For health costs, he has health coverage through work, so the premiums do not need to be added here, but he does buy contact lens monthly. Auto and transportation costs are $350 for his new Honda he just bought, $120 for insurance, and since he lives really close to work, only about $80 for gas. He has no education costs, but under the loan section, he does have a student loan for culinary school where the payments are about $250 a month. Under savings, he saves about $500 a month into his bank account. And the giving section doesn't apply to him because he's out here trying to make it big before he gives back to his community. Lastly, for miscellaneous expenses, he spends about $250 for entertainment, $200 for travel, $100 on new drip monthly, and $50 on personal care. And once we calculate results, we can see that all his expenses are broken down into the different categories. Key reminders, some of these categories may not apply to you when you do this exercise, but do your best to account for all your spending, so that way you can really understand your spending habits. You want to take the time to do this next step, which is also really important, which is analyze your expenses and really take some time to look at this and ask yourself these questions. Does anything seem surprising? Can I potentially cut back in some areas? Am I underspending in some areas? Where am I spending the most money? Don't worry, housing is supposed to be the greatest chunk of your expenses if that is the case. Really take the time to analyze this information to understand what are your spending habits. This is one of the least glorified areas of personal finance, but in my opinion, the most important. After doing the analysis, you should be able to account for every cent that comes in, but also more importantly, understand what you are spending on. This is super important because from this information, you can also create your budget. The B word. Yes, I'll give you some tips on how to create a budget and some strategies to ensure that you do not blow through it. Common questions I frequently get when it comes to the cash flow analysis is, hey Ash, how much should I be spending in some of these categories? How do I know when I'm spending too much? And those are great questions. And my response is always, it really ultimately depends on the individual. And the reason is your spending habits are going to differ from your friends, your family, your coworkers, or anybody else your age, because we all have different goals, objectives, family dynamics, and income situations. So when it comes to some of these categories, it ultimately boils down to you. But I will give you a couple of rule of thumbs when it comes to the housing and debt categories. And I usually don't like rule of thumbs when it comes to wealth management, being that our situations are so unique. So really apply this loosely. So when it comes to your housing and living expenses, it should not exceed 28% of your monthly gross income. And the key word there is gross, which essentially means before taxes. Easy way to find what your gross monthly income is to look at your pay stub under the employee earnings category. It's most likely going to be above or before the employee taxes section. So rule of thumb, when it comes to housing and living expenses, it should not exceed 28% of your monthly gross income. Quick example is that if you're making $5,000 a month gross and your rent is $1,200, you do basic division and put the $1,200 in the numerator divided by the $5,000, and that will give you 24%. Again, use this loosely because I work with numerous clients in California and also New York, states where it's extremely expensive as hell to live. So if you're breaking through that 28% threshold just slightly, I wouldn't worry too much. I've had clients, including myself, since I do live in California, be at or around the 35% mark. But I will say if you are approaching that 40% plus mark, that would be a good time to reevaluate your expenses and your living situation. Another rule of thumb is a 36% rule. This is the combination of housing and living expenses plus debt payments. So basically it's the same calculations, we're just adding any debt payments that you have. Pro tip, if you pay off your credit cards in full every month, do not put your credit card expenses in this calculation. This 36% rule only applies to debt that is being carried over from month to month in regards to the principal balance. So once you add in the housing and living expenses, plus you add in your debt payments, if it barely exceeds the 36% rule, I wouldn't worry too much. But if you are approaching the 50% mark, I would definitely consider reevaluating your living costs and also your debt payments. Most folks, when it comes to debt and large debt balances, they never consider to consolidate or refinance their debt. So that can be something that can certainly bring those debt payments down quite a bit, especially since interest rates are at record lows right now. I'll have a video on debt and debt management coming out soon, so I'll talk a little bit more in detail on what that looks like. So once you've done the aggregate and also the analysis piece, the final step is to execute. You finally got to the point where you can execute the B word. That's right, a budget. I'm gonna let you guys in on a secret though. I've never tactically created a budget for my clients ever, and I'm going to tell you why. One of my jobs as a financial planner is to do one of two things: either maintain or enhance your quality of life. That's it. We're not reverting. You've worked way too hard for your money to get to this point to not live your life. With that being said, budgeting is more of a mindset than anything else. So if I actually created budgets and monitor spending for my clients, not only would that be tedious, but my clients would hate my guts because they would think twice before they even go to Starbucks or buy those new pair of shoes or book that vacation. And that's not what I strive to do. I'm not here to inhibit anybody's quality of life. I'm here to maintain or enhance it. That being said, the number one reason from my experience why folks blow through budgets is that they make them too restrictive, and in some cases very unrealistic. They cold turkey stop eating out, buying those shoes, booking travel, and basically they stop living their life. So my advice is, when you're building your budget, to ensure that you don't blow through it, incorporate those lifestyle activities. Shopping, travel, bottomless mimosas, or whatever you're into, dial that into your budget. Also be sure to incorporate any family dynamics. If you have any dependents, or if you help out your mom or your dad or your brother or sister, make sure you entail that into your budget as well. Incorporating these elements into your budget will help you stick to it. Another way you want to view your budget is by breaking down the expenses into two categories, and that is fixed and variable expenses. Fixed expenses are going to be the ones that don't change month to month, like rent, car payment, bills, utilities, etc. And variable expenses are the ones that fluctuate month to month, like gas, travel, hobbies, DoorDash. Once you have all of your variable expenses identified, inflate them by 20%. And yes, I said 20%. So if your bottomless mimosa budget for the month is $100, put $120. Some of you are probably thinking, yo Ash, I'm gonna be spending 20% more. This doesn't make any sense. Well, dollars don't always make sense. They just make more dollars. I should trademark that. Can we do that? But no, in all seriousness, Kathy, don't worry. You won't be spending 20% more a month because these are variable expenses, which means you don't always have to spend as much in these categories. For example, since work from home started, my monthly gas and travel costs have been zero, but my grocery bill and DoorDash skyrocketed, so they almost offset. And that's the reason for that 20% increase. We want to create budgets that are 1, realistic, 2, adheres to your lifestyle, and 3, allow room for those expensive months that can potentially discourage us us if we steer past it. Here's some tools that can help track and monitor your budgets once you've created it. I highly recommend using an app because it helps tremendously with the high-level overview and snapshots of where you are month to month in any given category. Quick disclaimer, these companies that I mentioned are just suggestions. I'm not in any way, shape, or form promoting these because I'm affiliated with them. I am not. It is simply to help you guys with the starting point. I personally use Mint. It gets the job done. Some other folks go super manual and utilize either Excel or Google Sheets, but just know that there isn't one method that supersedes the other. It ultimately comes down to preference and your willingness to commit yourself to your budget and also your finances. And I know it's tough. This financial journey stuff, man, requires a lot of self-motivation, but I'm here to remind you that you can do it. I really hope this overview has provided you with some insights on how you can get started on your financial journey. So if this has helped you, please be sure to comment, like, and subscribe, and also be sure to share with your friends and family or anybody that you think might benefit from this information. We are always looking to grow our community here, where our objective is to connect and empower individuals to live a better financial life. My name is Ash. Till next time.